but a warm welcome to wherever you are in the world. My name is Andrew Thake. I'm from Mines and Money, and I would like to welcome you to our second pitch battle of our Mines and Money online global event. Today, we have three fantastic mining projects that will be vying for the attention of our five panelists of esteemed investors with over 100 years of investment experience between them. Just to briefly introduce our investors, they are George Petker of Versatech Capital for Mining, Michael Colligan of Blue Lakes Advisors, Joe Mazumdar of Exploration Insights, Miranda Werstiuk of OCIM Precious Metals, and Luke Tenhave of Karumba Research. A warm welcome to our investor judges. For the investor judges, they will listen to each of the mining companies pitch in turn. Each of the mining companies will have 3 minutes to go and pitch and wow them with their mining project. At the end of those 3 minutes, we will go and turn over to 7 minutes of Q&A from our lineup of our investors who can ask any questions that they choose to ask. At the end of each of the three mining companies' pitches, I will go to each of the investors in turn and ask them which is their most investable project and why, and which one, if they had $1 million to invest, they would go and invest it. The winner is obviously the person who wins the most votes and wins the most money. I think without further ado, our first contestant is going to be George Young from Altair Resources. George, if I can just give you sort of like 10, 20 seconds or so just to do a share screen and get your slides up on the screen. And then I can, and if we're able to go and do that for us.
Okay, can you see it now?
Yeah, we can see it, and we now have your full screen up. So just as a bit of a reminder, George, you'll have 3 minutes when I say go, and I'll also at 2.5 minutes, I'll give you a 30-second warning. So as you're ready, your time starts now.
Thank you very much. This is George Young with Altair Resources Incorporated, and I'm glad to be here today. I want to remind you investors that the only thing you really need to make a great investment is a time machine. If you know what the conditions are today, and you can travel back in the past and make your investments, or conversely, knowing what the conditions are today, and also knowing what the conditions are going to be in the future and investing today based on that, you'll make great investments. The closest thing we think that you're going to get to having a time machine is investing in Altair Resources, because we are a $5 million market cap company with an asset that in the future, very near future, is going to be justified to have a $400 million position. And the reason I say that is because I'm taking you back 10 or 12 years in Burkina Faso. Let's go to that next slide. I've got my assistant here doing that for me. Taking you back 10 or 12 years to Burkina Faso, knowing that we have today a project called the Wararadu project in Altair. It has 400,000 meters of drilling on it today. It has 1.4 million ounces at a gram, and it is ready to go into feasibility. But yet you can buy it for prices of 10 to 12 years ago, because Altair is only a 5 million market cap today, where you can see what the market caps of the companies in Burkina Faso are today. We are very comparable to the asset that Orezone has at this time, ready to go into feasibility. And that would take us to the 400 million market cap level. Not only that, though, travel with me back to 1968 in the Carlin Trend in Nevada. How would you like to stake a bunch of claims on the Carlin Trend in 1968 in Nevada at the prices back then? You would have done extremely well in your investments. Today, you can go to the Charsk Gold Belt and you can go to Kazakhstan with us, because we have 2 projects in Kazakhstan with a combined 2.4 million ounces, ready to double or triple those numbers, bringing Western exploration techniques into the old Soviet era exploration projects. We can easily double those assets, we believe, in Kazakhstan. You have the likes of Polymetal and Glencore. Polymetal uptrend with a 10 million ounce deposit. They're producing gold.
30 seconds left.
Thank you. They're producing gold for about $500 an ounce cash cost. Glencore likewise with a 5 million ounce deposit. We are just downtrend from them with a mine that is in production on the oxide portion of its deposit, ready to transition into the sulfide portion. And we also have a project in central Kazakhstan, which is at the top of a major copper porphyry gold system, 500,000 ounces ready to double that. And it's also in production on its oxide portion. So time travel with us in Altair and invest.
I think we have your 3 minutes is actually like now up. So thank you very much for that, George. That was an absolutely fantastic presentation. If I can just ask you to take your sort of like slides down, certainly your presentation about having a time machine certainly brought back to me memories of that film, Back to the Future. But handing it over to our audience of investors, were they impressed, and what questions do they have for George Young of Altair Resources? Who would like to go first? I'll go to George Petker first, followed by Miranda. George.
Am I unmuted?
You are unmuted, George.
Okay. George, I saw the Kazakhstan one and the various mines that were on there. Where was Kumtur's Centera mine?
About that's down in Kyrgyzstan, I believe.
Oh, it's
So
not in your region.
Yeah,
okay, then I apologize for that question.
No worries, no worries.
Different stand.
Kazakhstan is a country approximately the size of Argentina. It's a huge country. It's very well endowed mineralogically, and it is a very stable country, a very diverse country. It's a real melting pot, a very great place to do business. And it's much different than many of the other stands. We think it's going to be, and this is why we're giving you a time travel opportunity. We think you'll see it becoming a major player in the resource business in the very near future.
Miranda, I think you had a question or two.
Yeah, thank you, George, for that. Just in terms of the Kazakhstan properties, do you 100% own them outright? Does the government retain any interest? Do you have to pay any royalties? Is there a value chain with the production? Does it all have to be purchased by the government or central bank? Can you just run me through that, please?
Yes, absolutely. And so we have an acquisition agreement to buy 100% interest in these properties. That would give us the right to continue to exploit and completely operate the projects on a 100% basis. There are government taxes and government royalties, and the central bank in Kazakhstan buys the gold output, but they buy at the spot price. So, for example, if you were to do some sort of you could do almost a derivative offtake arrangement because you're getting the spot price at the time you deliver. And interestingly enough, the Central Bank of Kazakhstan is amassing gold, and it's making a great underpinning for their economy and to do business in Kazakhstan. So we actually see that as an advantage because it makes for a very stable country economically. And you can, because you're getting the spot prices, it's like virtually you're still getting the taken in kind, so to speak.
Right. Okay, thank you.
Do you have any questions? Michael Colligan, do you have any questions?
Yeah, George, just a quickie. How much will you have to spend to buy the 2 mines in Kazakhstan?
The total price for those is $106 million, and it's paid over time. We have a number of financing sources on a debt basis, on a very favorable debt basis that we're looking at to finance the acquisition of that, as well as the build out. We've received a number of inquiries from different funds, different potential strategic partners, and from people who are interested in constructing the projects as we expand them, who would give performance guarantees. There is a tremendous interest in Kazakhstan right now, and that's why I'm telling you, I think that it's been off of the Western companies' radar screens pretty much, but one of the gentlemen that sits on our advisory board worked in Kazakhstan for 6 years And he comes back just raving about the country and the business environment, the tolerance, the stability. He was involved in resource development, and it's a great place to work. And there are a lot of people wanting to get involved. You got a large, long border with China, long border with Russia, with the stand countries. You're essentially an extension of Eastern Europe. EBRD is interested in investing there. And they have great relations with all those countries. They have great political relations, diplomatic relations with the US. So it is a spectacular area right now to invest in. And we, as a Western company, we almost have first mover advantage.
Okay, thank you very much for that. I think we've got a question from Luke Ten Hove of Karumba Research. What's your question, Luke?
Yeah, thanks, George. Who are you buying this from, and why are they selling it?
Excellent question. Kazakhstan also hosts the world's largest undeveloped tin resource. I forget the name of it right now because it's a Russian name and I have trouble with that. But it is owned by our seller. They are concentrating their efforts to develop the world's largest undeveloped tin resource. And so to get some cash out of these assets right now to do that, that's what they want to do. It is not because, they're not interested in gold or that the projects they're having a hard time with, but they are looking at a strategic opportunity to then plow that money they get from us into the development of that tin resource. And that's another thing I think that speaks highly for investing in Kazakhstan, because it's a very well mineralogically endowed country.
Okay. I just want to go to our last investor who hasn't had yet asked a question. Joe from Exploration Insights. What questions do you have for George?
Okay, just to get an understanding, is your focus then on the Kazakhstan project to acquire that? Is that the news flow for the next 6 to 12 months?
Actually, the news flow will be both Burkina Faso and Kazakhstan, but from a management point of view, think about it this way. In the next 2 years, most of what's going to be going on in Burkina Faso is going to be feasibility work, which by definition is going to be being done by third-party consultants doing the independent evaluation and preparation for feasibility. So from a management perspective, we have the luxury of not having to have too much day-to-day hands-on management activity being consumed by the feasibility process, because it's going to be being done by third-party consultants. So for the next 2 years, we can focus more primarily on Kazakhstan and the development and the build out there, while we are having a $400 million worth of value in terms of market valuation being built through the feasibility process in Burkina Faso, underpinning what we'll be doing in Kazakhstan. So again, investing in Altair represents a real double threat for you in terms of your investment. Because if you look at Orezone, for example, Orezone started their exploration on Bomboré project in 2005, put 400,000 meters of drilling on in 10 to 14 years worth of time, then went to feasibility. You start at year 14 in Orezone and go to feasibility to year 16, this is where they are now. And that's what we'll be doing, but we don't have to spend a lot of management time doing it. It's an ideal scenario to build value while you can focus management attention on another huge elephant in Kazakhstan.
Okay.
But what's your working capital position?
Sorry,
Just quickly.
actually, sorry, Joe, because we just come to the 8-minute mark for Q&A. So I probably, unfortunately, have to just cut off the sort of Q&A here. So apologies to sort of like Joe, because I know you wanted to ask like another question. But thank you very much for that, George. That was a really good presentation. Certainly sort of like inspired me to take a closer look at Altair Resources, and certainly a very, very strong first pitch. Just actually, whilst I asked the next presenter, Brad, if you can just go and get your slides up. what I'll be doing is for the remaining two presenters, because I allowed 8 minutes Q&A for George and Altair Resources, I'll also be allowing 8 minutes for yourself, Brad, for your Q&A, and likewise for yourself, Luke. So I'm just even for everyone. I think with that in mind, I think we can now have your slides are up, Brad. So this is Brad Rourke from Scotty Resources. Why should we be investing with you, Brad?
Wonderful. Thank you very much for everyone and for your time. I'm trying to move my slides now. Oh, there we go. So Scotty Resource is an exploration company situated in Northwest British Columbia in the Golden Triangle. Just finished our 5th year. I've been involved with this for 5 years now. We've done over 12 transactions. And as you can see, we've created quite a land package in a very desirable area. The 3 things I'd like to, in 3 minutes, would be like, we have the people, we have the geology, and we have the infrastructure. What got me involved, it's a past producing gold mine, produced a 1/2 ounce per ton in the 80s. When Peridium built its power line right beside the Scotty gold mine is when I got involved. And after cleaning up, we've done about 3 years of exploration with great success. These are some of the highlights from our last year's drill program. As you can see, we have 4 zones. I'm only showing 3 zones here right now, but we have 4 zones kind of working for us as we took off and started doing property-wide exploration. In the past, it was just production focused. And we've come away with some really encouraging geology, and it continues to play out. What I would like to really show is just some of the success that we've just released in just as of lately. We have a new discovery here on the Blueberry. Those are our hits from last year's drill season and then just the beginning of this. There's a lot more to come. But as you can see, that's a road accessible near surface target. And again, new discovery. We didn't have any idea that we had this north-south trend happening, and it's playing out extremely well for us. There's still 12,000 meters of drilling from this season that we haven't released yet, and we haven't gotten back yet. So lots of news coming. I'd like to point out in the Golden Triangle, even in this downturn that we've had in the last 14 months, never has there been more money that has gone into the area. And I think that's overlooked, whether you're talking about the Lundins, Hochschild, we have Ascot being built as we speak. There'll be a mill turning 20 kilometers down that road that you see in 12 months time. So we've got the infrastructure. We certainly have the geology. I have 3 other zones that we'll just highlight this one. This is kind of our most exciting at the moment, but I have 3 other zones that are giving up results similar to this. So we are in the right position. We've got track record. You can look back for the last 3 years to kind of see if we do what we say. We're happy with what we've done. This is the completed work program that we did this season. So what people can expect, a lot more news coming. And we have cash in the bank. We have no debt on any of our lands, or we have palatable debt, like $100,000 left to go.
Okay. I think on that note, on that positive note, because you've just gone over the 3 minutes mark, that was a great presentation, Brad. Thank you very much, as always. If you can just take your slides down, Brad, so we can just prepare for the Q&A. For the Q&A this time, I'd like to first of all go to Joe from Exploration Insights. And Joe, if you've got any questions, if you'd like to fire them away at Brad.
Okay. Hey, Brad. Just on that 14,500 meters, I know the assay turnaround times are rather slow. How far are you in terms of getting those results pending? How much do you have left to go?
Well, a little secret, I don't believe everybody's being backed up as they're saying they are with the assay labs, but
Really?
what we did, we took an initiative and we had SGS come put a prep lab in the town of Stewart. So I was doing all our prep in Stewart, and the backlog in the past was the prep. You're shipping all these samples to the city. So we're still crushing rock as we speak, but I've already put out 2 news releases. I've received 2,000 meters back already. And so there's another 12,000 meters to come, but I anticipate anytime soon. I just don't think anyone wants to put news out right now.
Yeah,
So,
just in terms of the deposit style you're looking for, is it sort of Pretium-esque? Is that what you're looking for, or where?
Could you ask that again? Sorry, Joe.
Yeah, just geologically, what's your target deposit style? Is it like a Pretium, or are you looking for a porphyry? What are you looking at?
It's an epithermal system, so it's similar to Pretium. On Blueberry, on the Scottie, it changes a little bit, but to an epithermal system, but it's kind of all mesothermal. This Blueberries is, we found it by accident trying to drill something else off, and well in advance of that target, we've hit this Blueberry zone, which is dissimilar than Pretium. But if you look at our Scottie gold mine, it's similar to the Pretium type deposits. So we have a couple different things working here.
All right.
Perhaps I can bring in some of the other investor judges. Just Luke, do you have any questions for Brad?
Yeah, I think Brett talked about yes, cash in the bank. I don't think you mentioned the number. Can you just share that?
Sure. Today, probably about $4 million in the bank. I probably have a few bills left to pay, or not probably, I certainly do, but we kind of have to prepay all these things. So I think by the end of the year, $3.5 million in the good should be where we're at.
And where will that bring you? Do you have 6 months? I mean, will that bring you another 6 months forward, or do you need to plan a financing soon?
It'll all depend on what kind we could wear. I could survive. Our G&A is quite low. I could survive a long time. It'll all depend on next year's drill program, and that's basically market dependent. Let's see what we get out this season, and you know, pretty tough for me to be excited to raise money at the prices we're at right now.
I think
It's also a bit risky. If you,
sorry, Luke, you go first. Sorry.
I mean, what would you do? I mean, you have $3.5 million left. If you get a really bad market and you're waiting for better prices, would you then just stop doing any exploration, or what's your plan then?
My plan is I'll go find another 9.9% partner if I had to take lower amount. If I had to dilute, I would find a single investor to come in. I'd like to point out, is 2 years ago, we didn't have any institutions. Now there's 4 of us that own 44% of the company. So we brought in some big support. If, let's say, it doesn't work out the way we want, rather than go to the retail market, I feel pretty confident I could find another person to buy another 10% of the company. And we would adjust our drill program to that. I could still do 12,000 meters for about $6-7 million for sure, all in.
Okay.
With my G&A and everything.
Excellent. I'd like to bring in our 3 other investor judges. If I can go to George Petker first. I think you've got your hand up.
Yes. Brad, you know, with Ascot being there, and you've got Pretium, and now you've just had SNP, you know, come along with, I think it's $100 million investment.
60%.
You're amongst giants. You're amongst giants. Are you just sort of continuing to drill so that you will be a target, a takeover, or do you have any intentions of having a production?
Well, I get that question a lot. I wouldn't be the right guy to start mining, although we do go down that road. I have Ernie Mack on my board and John Williamson, who are
Brad, were you able to hear me?
Yeah, I hear you. We're an exploration company, George, and that's what we'll stick to our knitting. But because of my 2 board members that are miners, we do entertain that, but we stick to the 5-year plan at this moment. Although once a month we have discussions with somebody who would love to, because it has a mining permit attached to it, it is quite attractive. But right now we're excited about Ascot putting a 2,800 ton a day mill just down the road. You know, that to me makes more sense. Although we don't shut the door on anything. It just, I'd be the wrong guy to start mining. Yeah.
Okay. Excellent.
Okay. Thank you for the honesty.
Okay. Can I go to Miranda from OCIM? Do you have a question for Brad?
Yeah, Brad, just quickly back to you. What's your current market cap?
36
Current market
million.
cap's just over how much? About just over 30 million, I think, or
30 million. Okay. Okay. And
Yeah.
you said you've got some of some big institutions, and who are they that came in?
well, I have two that are at 9.9% for a
Yep.
reason. They're not
Yep.
out there, but then I have
Yep.
Eric Sprott owns about 13% of the company. And
Okay.
I still maintain 7%. And I didn't
Okay,
start
yep.
this company. I purchased every share that I have. So
Okay.
that's right.
Great.
And then
Okay.
I have a lot of interest, or my phone seems to be ringing from single asset producers around the world, because I
Right.
think the vacuum created is we know there's interest there, but we don't want to get too far ahead of ourselves. We have a pretty good stable of the three big investors right now.
Right. Excellent. Okay. Thanks,
Excellent.
Brad.
Excellent. And I'd like to turn to Michael Colligan. Michael, do you have a question for Brad?
Yes, Brad, you've got a lot of interesting drill holes. When is the resource going to be available from all of that?
Well, I think what we've done with this year's drill program is we've always said, unless we can show 1 million ounces of high grade, we're not going to bang our heads against the wall to come up with a resource. I believe at the end of this drill season, we will be in a position where we'll be able to make that decision. But if I can't see 1 million ounces, we're going to continue to explore. We're very hopeful that we're starting to see this. Just Blueberry alone, if you back of the envelope things, it's pretty easy to see a lot of ounces.
I did the back of the envelope, and yeah, I did see that you were a long way towards that 1 million ounces. So
That's right.
by the end of this year, you may have something to talk about in that respect.
Correct. I think we make a decision on that. On one of the zones I didn't speak about, on the old Georgia River mine, there's non-compliant 270,000 ounces there at 20 grams. We've gone in, we relogged the core. We're feeling comfortable with that. And we don't really promote that, but I think, that Georgia River, God willing, could add another 300. And then what's happening at Scottie, we're starting to feel comfortable that we're going to see this 1 million ounces. And again,
Okay, excellent. Excellent. I think that's just over 8 minutes. So I'm going to just interrupt there, Brad. That was really fantastic. Great presentation, Brad. Great Q&A as well. So that's really, really well done, Brad. So we've had two fantastic presentations. The first, as a recap, was from George Young of Altair Resources. Then we heard Brad Rourke from Scotty Resources. And now, just while I was just giving a recap, Luke Alexander from Newcore Gold has got his slides up on the screen. So Luke, if you're ready to go, I'll start the timer now.
Yeah, thanks, Andrew. So I'm Luke Alexander, CEO of Newcore Gold. I spent the first 15 years of my career on the investment banking sell side of the business, advising large natural resource funds around the world on different mining opportunities. And what I learned through that whole process is you really need three things to make a great company: great asset, a proven management team, as well as strong support from the capital markets. Our project is the Enchi project. It is an advanced stage exploration project in Ghana. Ghana is a great jurisdiction to be operating in. Don't listen to me, but look at who's operating in country. You've got 4 of the top 10 largest gold producers in Ghana. We've got a 1.4 million ounce resource, and we're looking to ultimately grow that. This slide here, we talk about the size of the project, so 216 square kilometers in size, so a very large project, as well as we've identified 25 targets to date. The pyramid on the left really highlights how we're approaching our 90,000 meter drill program. We've got our deposits where we're looking to step out along strike. We view that as low risk exploration. We're going back to previously drill tested areas, looking to bring those into the resource category over time. And then we're also targeting some new areas for the first time ever. The last focus for us is the opportunity at depth. If you look at these greenstone hosted deposits along the Sefwi-Bibiani belt, including the Chirano mine, Kinross's Chirano mine, 50 kilometers to the north of us, what you'll see is they really grow in size as you start to drill deeper. Prior to this 90,000 meter program, the deepest drill hole was only down to 150 meters. Our 1.4 million ounce resource sits primarily within the oxides near surface. We have started to drill deeper, and we've had some very encouraging results, and we're going to continue to follow up on that. The last thing is you can have the greatest asset, be in the greatest jurisdiction, but if you don't have the support from the capital markets, it's pretty much pointless. So we've got a very strong team, which has ultimately led to us being able to get this asset, push it forward. Great support from institutional investors. Since I joined a year and a half ago, we've grown our institutional ownership from 0 to about 40%. You can see a few of them listed here, as well as we've got great support from the capital markets, tier 1 investment banks out of Toronto. You can see them listed here. Strong capital structure, only 120 million shares outstanding, no warrants, and very well cashed up to execute on that 90,000 meter program. All of this is also underpinned by a PEA, which we put out in June. That outlines a heap leach project, 212 million after-tax NPV at a 1650 gold with an after-tax IRR of 42%.
Excellent. That was 2 minutes and 57 seconds. So that was perfect in terms of timing, Luke. Well, as you just take your slides down, I was talking to somebody about Ghana last week, and they described it to me as Africa for beginners. So I'm not sure as to what our investment panel think about Ghana or think about Newcore Gold, but I'm going to throw it open to questions. I don't know, Michael Colligan from Blue Lake, would you like to kick off on the Q&A?
Sure. The obvious question is, you've got a PEA for a starter operation. Are you going to do that? Because
not at this stage. Our view is that given the size of the exploration opportunity that we've got at our Enchi project, we want to build it to a 3 to 5 million ounce resource. If we went through it in detail, it would be very clear to you that there's a huge amount of exploration upside. I mean, to date, we've probably only drilled on 10% of the prospective, targets across our overall project. All of them remain open along strike and at depth. And part of the reason we talk about building it to a 3 to 5 million ounce resource is that's when we think we'll create the most optionality for our shareholders. At that point, you're potentially attractive to any mid-cap or major out there. So that's really the focus for us, is continuing to explore. But our view is that by putting out PEAs, that really fundamentally underpins the value of the company for our shareholders. I mean, $212 million after-tax NPV at 1650 gold relative to, call it a $45 million EV for the company, really highlights the the project and the upside for shareholders.
Okay, thank you.
I see that Luke Tenhab from Karumba Research. I see that you have your hand up. What questions do you have, Luke?
What is permitting like in Ghana and in the area you are in?
Permitting's good in Ghana. I think the fact that you've got 5 million ounces of production in country. It's a country that is very supportive of the mining industry. So as a result, getting permits isn't an issue. The other thing I'd highlight is infrastructure. We've got great infrastructure at our project. We've got a paved road that runs right through the middle of the project. You can drive 100 kilometers an hour along that road. There's a power line that runs beside it. Town of Enchi is about 10 kilometers away, so far enough away, no issues from a construction perspective. But also it means we don't need to be building camps in the middle of deserts. We can draw upon local labor there. It's got a hospital, so we're very fortunate that permitting's good. And as well as obviously infrastructure, and then mining services as well, which I think ties into your permitting question. There's great mining service companies in country. Ghana, because it's such a safe jurisdiction from a security and a political perspective, it ultimately acts as a hub for a lot of West Africa. So with that, you get a huge amount of service companies in country for us to ultimately draw upon.
And one more, if I may, how many people do you have in the country full-time as a staff?
So we've got 40 kind of full-time, and then we've got roughly another 40 casual labor. That's the other great thing, is because you've got 5 million ounces of production in country, there's a huge amount of skilled labor. So all of our employees are Ghanaian. We don't have any expats there. And we've actually been able to attract very high quality individuals from all over Africa who want to get back to Ghana, who want to be within a 4 or 5 hour drive of their families. So we've been able to attract very top tier personnel from that perspective. So it again speaks to what a great country Ghana is.
Okay. Thank you for that. I think that George Petker, George, you've got your hand up. What's your question?
George, you just went on mute. You were off mute and you just went back on mute.
I will allow an
Off
extra
mute.
15 seconds. George, what's your question?
First of all, good presentation, like the conciseness. I did want to ask, because many countries are beginning to look at their mining laws and they feel that other recipients of their minerals are getting most of the advantage. What is the condition like in Ghana?
We haven't seen any pressure. I mean, Ghana does have a 5% royalty across the board. So, you know, Ghana does participate in the upside of these projects. And again, I think, you know, if you look at, you've got 4 of the top 10 largest gold producers operating in country. Newmont, for example, currently 14% of their global production comes from Ghana. They're putting another $800 million into the country to expand the Ahafo project, which is to the north of us along the Sefwi-Bibiani belt. That will take their exposure to 20% of global production. So I think that speaks to itself in terms of what a good jurisdiction it is, but also to have those major mining companies, you know, there to work with the government on making sure that everyone benefits, all stakeholders benefit from the project, I think is a real advantage for companies like us to have them paving the way for us to push our project forward. So it's a great jurisdiction, George. And again, hopefully that's highlighted by some of the points I made.
Okay.
Thank you for the comment.
If I can just bring in Joe Mazumdar from Exploration Insights. What questions do you have, Joe?
Hey, Luke, just a question, like your project, your heap leach is, how many ounces was that, like resource wise?
Our current resource is 1.4 million ounces. And if you look at that 1.4 million ounces, about 80% of it sits within the oxide and transitional zones. The average vertical depth of the pits that constrain that 1.4 million ounces is only down to 63 meters. So it really has been focused on kind of, you know, the oxide transitional zone, which as you would know, lends itself to a heap leach operation, which is much lower capex, which really drives the economics of our PEA. But now, as I mentioned, we are starting to put some deeper holes as well. Prior to this 90,000 meter drill program, we had never drilled below 150 meters. So we are starting to drill into the sulfides, but we're also not losing focus on the opportunity along strike at all of our deposits. Those are very economic ounces. And we're going to continue to look to add that to the overall 1.4 million ounces that we currently have. The last comment I'd make, Joe, that 1.4 million ounces, if you look at all the historical RC and diamond drilling that feeds that, you're looking at about 76,000 meters of drilling. So needless to say, you know, the 90,000 meter program that we've currently got, which is the largest ever, we think will meaningfully add to the resource, as well as look to make some new discoveries and bring some of the previously drill tested areas into that resource over time as well.
Okay.
So just the last question, one more question, just one. Okay. In terms of the heap leach grade versus the sulfide grade, what are you contemplating? Because your 3 to 5 million ounces, I'm assuming, is not going to just be oxide transitional, it'll be sulfide as well. So what kind of grade are you looking for there to be economic where you are?
Yeah, so our from a grade perspective, you know, our heap leach grade is currently sits at 0.62 grams per ton, and you compare that to heap leach projects around the world, you're looking at more like 0.4, 0.5, even down to 0.3 grams you're seeing. So that's one of the things that really helps drive the economics of this project is the higher grade oxide material that we've got. As we get into the sulfides, we haven't started to wrap a grade around that, but I would expect that we're going to be starting to look for, you know, 1 gram plus type material to justify a milling type operation. And when we look at our resource, and you can look at this in detail, we've broken it out within our corporate presentation. If you were to go from a 0.2 to a 0.5 gram cutoff, you're looking at still just over 1 million ounces at about 1 gram per ton. So there is a lot of flexibility within the current resource that we have to increase the grade based on, you know, different cutoffs. But really the focus has been on that oxide. But as we drill deeper, we are starting to see.
I think
nice
we're
higher
now just over the 8 minutes 15 mark. So unfortunately, I just have to interject there, Luke. So
Thanks,
apologies for doing that. But that was an absolutely superb presentation, superb Q&A. So we've now heard from 3 projects: Altair Resources, Scotty Resources, and Newcore Gold. Just while I allow the investor panelists just to perhaps sort of like think about how they're going to allocate their votes and why. Just a bit of a plug. The next event coming up, run by Minds and Money, will be our Minds and Money in-person event in London on the 1st to 2nd of December. Certainly would invite you all to go and attend. We already have over 100 mining companies confirmed. So anybody who is interested in attending, please reach out to me or any of my colleagues, and we'd be delighted to supply you with more information. With that sort of like plug in mind, I'm now going to go to each of the investor judges in turn and ask as to who would they virtually allocate their $1 million worth of money if they were able to hypothetically invest, and why. So firstly, I'm going to go to Miranda Werstiuk from OCIM Precious Metals. Miranda, who would you allocate your $1 million to, and why?
And so, first of all, thank you for all the great presentations. This is certainly an interesting group of companies. You know, OCIM, you know, representing, sort of faithfully representing what we do, is more on the debt side, but there's a small equity component. So I am probably going to go outside the box here, but I am going to put my $1 million into Altair because it's grossly undervalued. Even though there is risk, you know, with the project acquisition in Kazakhstan and the price tag, we could certainly in the longer term look to support something like that. But the jurisdiction, given my discussions with other groups who have worked there and people who've been on the ground there, certainly there is huge opportunity. We would look to balance the risk, but yeah, I would put the money into Altair.
You realize you become the controlling shareholder then, wouldn't you?
yeah.
Well, very, very well done, George. You've already got 1 vote to go and invest in your time machine. But what do our other 4 investors think? The second investor I'm going to ask for their votes and why is Luke Tenhave from Karumba Research. Luke, where are you going to give your money and why?
Yeah, I'm impressed by intrigued by the Altair story, but I don't know enough about the deal structure and the history of the vehicle to really put my $1 million into it. So I decided to go for Newcore Gold. I think they have a good group of people, good plan. So I'm gonna confidently bring my $1 million there.
Okay, that's a very, very well sort of thought out answer. So thank you very much for that, Luke. So I'm now going to go to the third judge, and I'm going to ask George Petker to unmute himself. So George, if you can unmute yourself, and George from Versatech Capital for Mining, where are you going to allocate your capital to and why?
Well, I would like to split it, but not evenly. I felt the Newcore has a great takeover potential. Even if they don't go into production, there will be majors looking for depleted resources within Ghana. And then, so I would give them 250,000 and 750 would go to Scotty. And the reason for doing that is, I think given proximities to Ascot, some of the same shareholders being on both companies, that will probably guide that. Plus it's a high insider ownership.
Okay, well, thank you very much for that, George. I will allow the split allocation of money. So after having 3 votes in from the investors, all All three miners are in a position to win it. Altair Resources is on 1 million. Scotty Resources is on 750,000. And just in the lead is Newcore Gold on 1.25 million. So I'm now going to turn to Joe Mazumdar from Exploration Insights. Who are you going to give your money to and why?
I'd go with Newcore. One, because they have working capital. Two, because they have a big drill program. And three, they have a goal, if they could get there, would make them a legitimate target. Yeah, I would go with them.
Okay, thank you very much for that, Joe. And last but by no means least, can I ask Michael Colligan from Blue Lakes Advisors, where would your money go to?
Well, it's an interesting one. In the interest of full disclosure, I know Altair from years back, and I've actually talked with George fairly recently about things. That said, if I had $1 million of other people's money, which is what I'm assuming here, other people's money, I don't think I'd take the risk of Altair at the moment. Instead, I'd split the money between Newcore for all the reasons that have been mentioned, and Scotty for all the reasons that have been mentioned. So that's how I would do it. So that'll complicate your calculations a little bit, Andrew. But you know, such is life.
It's fine. It's fine. I can sort of like, although my maths is probably the worst of anybody on this pitch battle, I think I can just about add up just to see as to who the winner is. I think my first comment to do is, first of all, a huge thank you to the three people doing the pitch battle. I've tried to do a pitch inside 3 minutes, and it's really hard to do. It's very hard to keep it succinct, very hard to keep it to time. The fact that all three miners were allocated money shows that they all did a really, really great job. And I'd definitely urge all the people who are listening in on this pitch battle to definitely go and encourage them to meet up with these three companies, meet up with George, Brad, Luke, and their management teams, because all three companies are worthy of your investment considerations. I'd also like to thank the 5 judges, George, Michael, Joe, Miranda, and Luke, did a fantastic job, asked lots of really, really good person questions. However, there can only be one winner. So I'd like to congratulate Luke Alexander from Newcore Gold for winning today's pitch battle. And one of my colleagues will be in touch with you later on this week with your mystery prize, which unfortunately is not $1 million, unfortunately, but it's something nearly as good as that. But I think that all that leaves me to do is to go and thank all of you for joining in. Hope that you enjoyed the pitch battle, and I hope you enjoy the rest of our Minds and Money Online Global 19th to the 21st of October show. Thank you very much.
Thank you.
Thanks,
Thank you.
Andrew.
Thank you, everybody.